Hey everybody, welcome to Stock Trading Pro. My name is Pete Renzulli. Today we got a lot to cover. Last week was just about one of the most amazing weeks of bullish price action while the bigger picture in the market was down. It really brought home a massive trading lesson last week in reference to whether or not you should trade what you think and all those negative headlines that we've seen probably for the last month and a half, or just learn to trade what you see. It's very, very hard to do, but last week was one of the top real-time lessons that you will ever get in the stock market, that you should not have opinions and you should just pay attention to what price action is actually telling you. One of the biggest things that we need to make sure that we remember is price action is telling us what's going to happen in the future, not what's happening right now. There's been a lot of negative headlines. Now we're towards the end of actually the last day of October 2022, and pretty much the entire year has been bearish other than a couple of rallies. Maybe all of this stuff has been priced in. So when I say all of this stuff, I'm going to talk about the month that the Dow Jones Industrial Average is having right now, which is one for the record books to the upside, believe it or not. Also paying attention to, we have the FOMC this week. What is Jerome Powell going to do? Are they going to pivot? Are they going to change? They're going to leave things alone, or are they going to give us a little bit of breathing room? Probably going to raise 3/4 of a point again. We're going to take a look at that as well. We're also going to take a look at a couple of tech stocks. Yes, a couple of tech stocks that had amazing weeks, and especially an amazing day on Friday. Friday probably was what we call capitulation, which was an overbought move that ended the most recent price action, which just kind of makes sense. We're going to talk about Meta. We're going to talk about Amazon. What's the next move for those stocks? But more importantly, we're also going to break down sector rotation, because every Monday we kind of set up the entire week after we do a snapshot of how last week is going to affect this week. We're very big on what's going to happen, not what happened in the past, but you got to take a look at it because it's going to influence the kind of profits we're going to go after this week. Last week, we had kind of more of an open road. There was really no big news except for earnings, but earnings was a really good push last week. Now that those big large cap tech stocks are out of the way as far as earnings, we can get right back into reading the tape, probably trading the order flow on those as well. But Jerome Powell this week is going to put a big emergency brake, I would say, on probably the one direction type price action this week. Doesn't mean that we can't have some good trades. We're going to absolutely have some good aggressive short-term trades. But I think the more aggressive trades, and when I say aggressive, I mean maybe a little bit more share size, maybe hold those trades a little bit longer, will probably be Wednesday afternoon and beyond. Now, the most exciting thing for this week is we're going to get a little clarity in the language that Jerome Powell uses. So if you've been trading for a while and you happen to be able to listen to the Fed announcement on interest rates, there's the announcement of what is expected, which I think right now it's widely expected it's going to be 3/4 of a basis points. And then there's what they say in that, usually the half hour after the announcement. The announcement gets hit, everybody reacts to it, the headlines happen. And then they start to talk a little bit more about what their future plans on. And that is really where the massive volatility and tradable opportunity happens, and probably the kind of price action that we're going to have for the remainder of 2022. So this Wednesday, really big, Wednesday, 2 p.m. Eastern time. If you're not aware of when that comes out or the fact that it was coming out this week, I'm happy to help you get prepared. So we got a bunch of stuff to talk about. Sector rotation is a big one. A group of stocks that just absolutely rocketed to the upside, no pun intended, and probably need to cool off a little bit. So we're really going to be setting up some trades for the entire week, maybe not necessarily only for today. So stick around. Be right back. Okay, so thank you so much, everybody. I want to make sure that we run right into the big stories that are affecting the markets this week. So we're actually going to take a look at first and foremost, actually, what the Dow is doing this week, which is just absolutely incredible. So you can actually see here on CNBC, the futures are down a little bit this morning, but that's okay. Look what the Dow is doing right now, on track for its best month since 1976. Now, the question comes in is, why? Why did the Dow do that? Industrial stocks. When we break down industrial stocks a little bit, you might not have been paying attention to them this week. I just want to give you an idea of, like, you're probably going to be like, holy, what was I looking at this week? And basically, we're going to take a look at stuff like this. When I said they rocketed higher, I wasn't actually kidding. Lockheed Martin just off to the moon this week. Caterpillar off to the moon. And even 3M, which actually did not have fantastic earnings, This is actually where the earnings day, where it opened lower, and this was actually the day 112 to 126, a pretty stress-free $14 since the earnings. But I think Lockheed Martin probably the top of the pack there. Boeing was actually dragging a little bit compared to the rest of the group, but there's a lot to pay attention to. So now, as we go through sector rotation today and we start to look for some ideas, if you're a regular viewer of the channel, you probably know the language that I'm about to use, and it's called the average true move. The average true move is what a stock typically does during a bullish move of momentum or a bearish move of momentum. Now, a lot of these industrial stocks, while obvious, are well beyond the optimal entry, which means that we call those bullish echoes. A bullish echo means that you can still look at it in that direction, but it is not a good risk reward perspective, even though it's obvious. And that's probably one of the biggest challenges, or I guess I would say one of the biggest mistakes. I'll just say it straight up that smart traders don't look for that last piece, because they'll look at it, they'll run scans and be like, yeah, the stock meets the scan and I can't wait to buy it. But they don't realize the stock has been up 20% in a very short period of time. And the stock needs to digest that gain before it ends up making the next big move. And actually, one of the biggest stocks that has been that way recently, which I think I traded every day last week, was IBM. It's actually a 19% move from this bottom here in the market when the CPI numbers came out. And this is a good example where you can see up in this area of 140, it's having a very hard time over the last, 2 years, right? Even last year. So 140 is setting up as a level where the stock is probably going to end up seeing a little bit of a pause. So I think that visual in IBM is a good visual for this entire week, where you're going to be able to do some scans, find a lot of stocks that meet that bullish criteria. And I'm going to show you a big list in just a second. But they might not necessarily make sense from, if I risk $1, is it likely that I will make at least 3? The way that some of these stocks are too far, I don't want to say too fast, because earnings came out, earnings were good. IBM had some other news. But the fact that they've gone so far without pausing it all, the risk reward doesn't make sense. You might be risking $1 to make $1, and that makes you a break-even trader. Those aren't the trades you want to take. So if you have, raise your hand. I've done this way back in the past, where you put on a trade, you think it's the most amazing trade, moves one day in your favor, you feel all good about it, pulls back for 2 or 3 days, you get stopped out, and then it does exactly what you thought. The only thing you were missing was just look and see what has it done recently, and what is the likelihood of it continuing for the risk you might have to take, and the risk meaning the stop loss. So I'll give you a good example. We actually had that happen in JP Morgan about a week and a half ago, where the stock actually exploded higher off of earnings. And if you're just looking to get long or be a buyer at that particular point, you bullish gap, breaks out, right? Looks like fantastic price action, but the stock needed to pause. So you can see we actually paused there for a couple of days, and that was the better opportunity to set the risk reward for a new trade. And you can actually see what the stock then did over the 5 or 6 days after that. So that's kind of what we're looking for here in IBM, Lockheed Martin, even in 3M, which actually had a big move to the upside. So we're breaking down the market and breaking down sector rotation. Real estate actually at the top of the list, ironically, this week, where that, even though the interest rates are going up, I think that they said this week mortgage rates this year hit the highest number since 2000, if I remember, 2002, where they're now over 7%. So a little bit interesting to see real estate actually hop its way to the top of that list. So if we break this down a little bit, I'm going to break down the industrials in a second. We're going to break down the sector rotation and look for some ideas. There was a really big list of stocks about 10 days ago that were super strong that have now paused. They actually went down the list, but now very similar to what we just said, that we're waiting to see happen in those industrial stocks, because they're kind of like off the charts up here. We had a different group of stocks, metals and miners, which were very strong, did pull back a little bit last week, and now they're setting up some new ideas literally today for Monday for this entire week. So you kind of see how our job is to follow the smart money in and out. Basically, smart money has all of those deep pockets. They have all of those people that are doing research, and then they allocate that money. They hand the money over to the traders. They hand the research over to the traders. They're like, okay, let's go start building a position in that idea. Let's let that one cool off a little bit. Our job, kind of just follow them in and out of sector rotation. And that's kind of the easier way to take a look at it. So if we go over, and you might want to take a snapshot of this, If we go back over into sector rotation, and if I zoom this in a little bit, you can see communication services kind of dragging out the bottom, right? That should absolutely shock no one with the way that this stock actually got clobbered last week, and Snap actually as well. Snap bouncing back, but obviously that's a pretty cool looking bear flag there right now. Amazon getting clobbered last week as well. So not a shock that these guys are on the bottom. Consumer cyclical, well, you think about it. What is consumer cyclical? Consumer cyclical, or sometimes known as consumer discretionary, are the things that we don't necessarily need, but things that we want. And usually we can go after those things when money's kind of a little bit more free. Maybe interest rates aren't going up every day. Maybe inflation's not as strong. So those things that are kind of like extra stuff that we don't really need, but we want, we're kind of cooling off on those things right now heading into the holiday season, because a lot of things are kind of overpriced right now. So we don't need those things. Electric vehicle cars for $100,000. Those are the kind of things you're not necessarily making a decision on right now. So that group of stocks is towards the bottom. Now, what kind of group would be moving up in that same scenario? Well, there's things you want and things you need. So what do you need all the time? So now we're actually kind of working our way from sector rotation into the real world. And no matter what's going on in the world with inflation and all that kind of stuff, well, we need Band-Aids, right? We need Band-Aids. We need to go to the doctor. We need to go to Walmart. We need to go to Costco. So as we start to work our way up that list for the remainder of the year, you can actually see Costco and those kind of guys are consumer defensive, and healthcare. And you can see healthcare just having an absolutely outstanding couple of weeks. Financials, we just showed you JP Morgan, and consumer defensive. We're going to break these guys down in a little bit more detail here as well. One thing I do want to remind everybody of is our boot camp is actually starting today. It's not too late to get involved, and we actually have a 5-day trial if you want to get involved. The link is actually below the video. Just to give everybody an idea, you can see you get started for actually just $49 if you want to get started today. So that $49 5-day trial is a very, very limited time offer. So if you're going to get involved in our boot camp ever and you want to trade with me for a couple of weeks, and when you finish the boot camp, you can actually keep the course lifetime. That's a very big deal, keeping our order flow stacking course lifetime when you finish the boot camp. All right. So if you wanted to learn more about that, click the link below and you can actually get started today. So I want to keep breaking down the news from last week, the news from this week, and how that's going to affect my trading heading into this week. Because remember, our job is to set up ideas of what's probably going to happen, not what's definitely going to happen. Nobody knows what's definitely going to happen, but our job is that we keep putting these pieces together, got a pretty good idea what's going to happen. And again, I want you to take a screenshot of this. I'm going to put it up on the screen. Everything that we do, everything that I teach stems from this. So first we're going to looking at the market, then we work our way up into sectors. So far today, we've talked about industrial stocks. We've talked about internet technology stocks, and now we're working our way up into the groups. So one of the groups that's actually been on fire recently, and when I say on fire, I mean no pun intended, we're talking about solar stocks. So basically ENPH, which is kind of the most expensive, I don't know if I'd necessarily say the leader, but they're expanding right now at or near a breakout. And if we zoom out a little bit further here, you can see that we're actually at or near all-time highs. So ENPH and the solar stocks are actually on my list today. So some of the solar stocks that I'm looking at, I'm actually going to type these in. Maybe you want to pause the video if you're watching the replay, but the solar stocks are on my list for this week. So again, you look for the market leaders, you look for stocks that are showing relative strength, and then you dig into that list of stocks for the ones that match your resources. Now, when I say resources, you might not be able to trade ENPH, which is a $310 stock that's near a breakout level, and that's okay. Now you go into that list of stocks and you search for other stocks that match your resources, which could mean your skill level, your risk tolerance, how much do you let the stock fluctuate, your account size. That's a big part of it too. You can still find stocks that might follow ENPH higher, but maybe aren't a $300 stock. So I'm actually going to show you how to do that right now. And we're going to use our buddy Finviz. So if we type in ENPH, we're actually going to do two things right now. The two things we're going to do is we already know that the technology sector last week had really weird pockets of opportunity where the large cap tech stocks just got absolutely demolished. You know, we're talking about Amazon, Google, Meta, even Microsoft took a hit last week. Apple, we're going to talk about in a second about how it rallied, why it rallied, and whether or not we think it's going to continue. But that's the larger group of tech. Solar stocks are a smaller group. So remember, we're going up that stock market power pyramid. Technology is the sector, but then the group in that sector is solar. So I'm actually going to show you how to break that down right now, and then also how to find the stocks in that strong group in that sector. Okay. So if we type in ENPH in FinViz, you can see that. Let me actually zoom this in a little bit right here. So you can actually see technology and solar. So within the solar group, there's 20 stocks. Now, this is very important, and it's a big part of learning how to trade. Just because a stock meets a scan doesn't mean that you want to start trading it. We need to be really tough in our criteria to say, before I look at that thing, it needs to meet my personal criteria. And I want two things. I want liquidity and I want volatility. Liquidity means institutions have their attention on it on a regular basis. So technically, what I'm looking for is at least 1 million shares per day traded if we're talking about a swing trade. I usually look for 2 million if it's a day trade, but 1 million for a swing trade, which is what we're talking about right now. The other part of that is volatility. Volatility means opportunity to make money. So what I want is those stocks to move a minimum of $1 per day, obviously, or more. So if we could take a look at what ENPH does, let me actually just show you all of that in ENPH. So the liquidity in ENPH, you can see it averages 3.8 million shares per day. And the average true range, this is one way that we get the volatility, is $17. So that means that ENPH averages 3.8 million shares per day. So plenty of liquidity. I can get in and out pretty much where I want. Institutions are looking at it pretty much every day. It's the only way for that kind of volume to happen because there's attention on it. And then it does an average of $17 per day from the low to the high, which means that stock has opportunity as well. So it's got smart money attention and it has volatility. That's an opportunity that we want to take a look at. So now we're going to break that same group down so that you could make a list of stocks in this hot sector, no pun intended, to find some ideas this week. But then we're also going to say, okay, that's the bigger list. Which ones make the most sense today? That's the most important part. Because remember, today means we're near the optimal entry where the greatest reward potential exists just before we're about to get into that position. Okay. So if we hop on back over into the solar stocks and we pull up our average volume, we want to take a look at over 1 million per day. And that knocked out 7 stocks. So those 7 stocks don't have the liquidity that we want. And then we go over $1 on average true range. So now that breaks it down to these 10 stocks. So that's kind of cool. So we, out of everything in the market, we broke it down from the market to a sector. Technology actually had a pretty good week last week. And again, we just saw what IBM did. We're going to take a look at some of the news from Apple and IBM from last week and why they rallied. But now we went one level above that. So just to give you the visual again, I just want to make sure that you have this wrapped up, right? Now we're over here. We're in the industry group. So the sector is the technology sector, but now we're in the industry group of solar. And now we're working our way up into stock-specific ideas. So when we break this down, we're actually going to take a look at performance, and we want to take a look at performance for last week. And you can see they were all positive, but now we also want to take about the dollar amount and whether or not they're still tradable ideas. So what we want to do is we want to break it down into the charts. And we already talked about ENPH right at that breakout level. It's kind of interesting about this ARRY $17 stock broke this downtrend. If we're looking at SPWR, looks like it's got to get above 20. Really hasn't done anything great there. Nova, not really, still in a downtrend. Run, still in a downtrend. FSLR, probably the one that I'd be looking at. So this is kind of cool. We just looked at 10 different stocks that met the criteria. ENPH leading the pack. I'd probably be having FSLR in my list right now. And maybe even SPWR because it broke that downtrend. And it looks like this was a significant level over here. So if this can get above 18, probably be looking at FSLR today. Let me actually go out to the daily charts. FSLR over 138. And what was the other one that we had? I think it was Nova, if I'm not mistaken. SPWR. SPWR is going to be the other one. The SPWR actually now breaking this move to the downside. And if we kind of zoom this out over here, we want to pay attention to where the stock has been having a problem. And it looks like it's been having a problem getting over 18. If it gets over 18, then we're looking up in that $23 level for the next move. Now, this isn't everything that we do, but it's a very good high level process for you to say, what is the market doing? And then go up the next level, which stocks are doing the same thing as the market. We went up to technology, and then we broke that down into solar. So that's one group of stocks that are going to take that list and pop them into my watch list to be ideas to trade this week. So now we actually want to make sure that we cover some of the big stories that are happening this week. We already talked about what the Dow is doing. Now, in case it wasn't clear, the reason the Dow had one of the biggest weeks this week for the month of October is because of those industrial stocks. Dow Jones Industrial stocks were super strong for the month of October. There were some other ones. Financial stocks were actually strong too. We showed you JP Morgan before, and that was actually kind of where the old school stocks kind of took over, and technology stocks kind of got beat up last week. So now we're going to work our way into this week. The Fed, Jerome Powell coming out on Wednesday. Now, the big conversation you're going to hear this week is whether or not they are going to what's called pivot. Pivot is the big thing, right? That's the big thing everybody's talking about. Now, the reason everybody is talking about the possibility of a pivot, if you don't know what a pivot means, a pivot essentially means they're going to stop or slow down aggressively raising rates. Now, why are they aggressively raising rates? Why does it continue to be 0.75 of a basis points? It's because they're trying to bring inflation from all the way up here to down here. And the main lever that the Fed has to do that is raising interest rates. That's really the top way that they can handle it. So we all know that that's what they've been doing. The pivot that everybody's hoping for, and I think what was kind of shocking to the market in the last 2 weeks was the consumer price index came in and was still pretty high, and the market did not go down. That's what should have happened. Last week, everybody was looking for the GDP numbers and the PCE numbers, personal consumption numbers that came out. And they were okay, but they weren't as bad as expected, which is very similar to what happened with Apple last week, where so many of those large cap tech stocks got demolished. Any company that beat the expectations was perceived as, oh, wow, amazing. And Apple had one of its biggest days in 20 years on Friday as well. So again, that's something else too. That's a really big part of trading. Look, we're not spending hours doing this. You could do this. You don't need to believe in your mind that you need to put hours and hours and hours of work into finding good ideas. What you need is a process. And hopefully I'm walking you through the top level of the process here, where once you understand what to look at, you're never lost again. You know, a lot of people that come into our Discord community, a lot of people that come into our boot camp, their number one roadblock is confusion. Confusion, which leads to overwhelm, and overwhelm leads to frustration. And they think that they don't have enough time to put these pieces together. I just want to be super clear about this. When you know what you're looking for, you're never lost again, which completely eliminates the stress. But what's more important is when you know what you're looking for, you could say, there it is. If I tell you, go look for that red dot, you're going to know if there's a red dot, right? But you're also going to know if there's no red dot. So that's kind of a simple way of saying it. But if you know the price action you're looking for, if you understand kind of what we just did, which is the smart money moves stocks around, we just kind of going with joining them, right? You'll know when something is obvious. The challenge for a lot of people is when they know what they're looking for and it's not there and they still trade anyway. So you got to stop that and then understand the last part, which is the optimal entry, which is if I hit buy button right now, if I hit that buy button, is there sufficient profit potential for me to justify taking that risk? So if there's a $5 stop loss based on the entry and wherever you plan to get out, if that's $5, you have to look at the stock and say, do I think I could make at least 15 on this trade in the next move? If the answer comes back yes, then then get in there with a little bit more conviction. You can put the trade on. It's when you're looking at it, you say, I'm going to risk 5 and I think I can make 5. Stay away from those ideas. Break-even trades make break-even traders. So now heading into this week, we got the Fed. I do not believe they're going to pivot this week. GDP numbers came in about what they wanted. It turned from 2 negative quarters in a row, which is the technical definition of a recession, to where it actually moved up. It was 2.6%, I believe, from the negative numbers, which was actually good, which is why we actually had that rally last week. But now we got the Fed coming in, and now the reality is setting in that they're going to continue raising. Buying a house, mortgage rates are going to continue to go up. Inflation's still here. Raise your hand if you go to the deli and get lunch and it's probably twice as much as you'd like to pay. They're passing along those higher expenses to us because they have no choice or they're not going to be able to stay in business. So that's what the big picture of the market's going on right now. And it has not slowed down yet in a way where the Fed says, I'm going to pull back. Now, if the Fed does shock and make a pivot and it's something other than 0.75 of a basis points, we can expect a big rally, a really big rally after that. So here's the deal. This is professional trading. And when I say professional, I don't mean quitting your job. I mean professional in you're taking it seriously. You know that you have your money in the market and you want to first protect it, but also look for ideas to make money. The first scenario is what's expected right now is the Fed is going to raise by 0.75 of a basis points. Again, if you're not sure what I'm talking about, we're talking about Jerome Powell here and what they're planning on doing and whether or not they believe the economy is slowing down enough in order for them to not raise again. So if that is the case, which is widely expected right now, we can expect that the market not to like that news and then pay attention to the language after the actual announcement comes out. If for some reason, which nobody expects right now, they say, you know what, GDP turned around, consumer prices weren't as bad, we're going to raise 0.75 now, but probably cool off a little bit after that because we like the direction of the numbers that we're getting from the economy. If that happens on Wednesday afternoon, we could see a vicious move to the upside if that happens. Now, what you need to really be thinking about, what we just talked about, is we just outlined two scenarios of monster news coming out on Wednesday. That's what professional traders do. Professional traders build scenarios on both sides of the market. And essentially what they say is, if this happens, then I plan to do this. And you have a risk management and position sizing for that. They also say, if this happens and this happens, then that's a different scenario. The challenge that traders have, and those that are pretty smart and hardworking, is when you don't have, if this happens, then I plan to do this. You only have, if this happens, and no matter what happens after that, you don't change your mind and you continue to trade anyway. That's really where smart traders who know everything about trading, really smart people who work hard, probably have a ton of books like that, can't make a dime because they're trading their opinion as opposed to what's happening in the market. So when you have what we call if-then scenarios, you're never lost and you're never confused anymore because prior to the market opening, prior to that announcement, prior to anything happening, you already wrote that down. Think about this. If you make these decisions before you put the trade on, and you say, look, let's use Curlin as an example. Curlin's talking to Curlin, and he writes it down on Monday for what he plans to do on Wednesday. He's just going to go look at it. He's going to trust himself and say, that's what I said before I put the trade on. Let's take action. Or that's what I was looking for. I'm not seeing that. I'm not taking action. I'm going to go golfing or something because it's not doing what I want it to do. That part of the stock market, for some reason, is overwhelming when it's really pretty simple. What do I want to see, and did it happen? Now, again, I'm oversimplifying it quite a bit. This is what we teach in the boot camp all the time. But if you get to that point where you know what you're looking for and you can tell if it's there or if it's not, I promise you 80% of the stress in the stock market will vanish because you're not going to be anxious to do something anymore. You're just going to pay attention and take the right action. And if you think back to now, if I gave you that suggestion in January of 2022, when the stock market topped out and started going down, if you said to yourself, what do I want to see? What don't I want to see? If what you do want to see continued and the market kept going, great, right? That would have been awesome. But if you said, what do I want to see versus what don't I want to see? And if I see what I don't want to see, what do I do? You probably could have saved yourself a small fortune in 2022. Now, I'm saying that as a lesson for the remainder of the time that you're in the stock market. Obviously, this is the kind of stuff I do in our community literally every single day, sometimes by the minute. It really comes down to trading the stock market. The actual part of trading is pretty easy because we already have it mapped out. The part of trading that's a skill is learning how to make the decisions in the moment that make it easier to trade. And those decisions become easier when you know what you're looking for. So if we break that down just a little bit more and take a look at some of the ideas from last week, we talked about Apple. Apple went up because they beat lowered expectations when everybody else kind of got hit really hard. We also been talking about the energy stocks. Exxon had profit that nearly matched Apple. So if we take a look at what Exxon and that entire group of stocks have been doing, the XLE is the ETF, and you can see what's going on probably for the last 6 to 8 weeks. By the way, you get a lot of people, this is really kind of proof, I hope for you, that a lot of people are saying that the market has been going down. There hasn't been that many opportunities. Well, if you pay attention to like what we're talking about today, and you actually put in that extra 15 minutes and say, where does smart money have their attention? Which stocks are moving in the direction that I want to trade? Which for most people, that means they want to buy stocks, right? We've been talking about energy for the better part of a couple of months. So if you're not finding opportunity, even while the market's going down, it just means you need to take that one extra 15 minutes, make another pot of coffee, sit down and say, I got to find some ideas because something is probably going up right now. If it is, I'm going to find it. If I can't find anything, I'm going to be okay with being in cash. One of the top things that we talk about in the community, and I strongly encourage to everybody, is PPC. Preserve precious capital is job number one. But remember, we hired ourselves as money managers. So job number two is we got to go find some ideas. So again, obviously the energy sector has been pretty strong. And if we break that down even further and take a look at the list over here, energy is down at number 8, but you can see the kind of month that it's had. It's the top month by a mile. The next closest one is industrials, which we just talked about. So if we head on over and take a look at some energy stocks for this week and what's going on for the entire week, we're actually going to take this and look on the weekly chart just to give you some ideas. We're actually going to take a look at stocks that were strong on Friday. And you can see we actually just talked about ExxonMobil. And again, these are weekly charts. So we're talking about a week of buying, a pause. So 4 of the last 5 weeks were strong in Exxon and Chevron. Right? Getting the idea, there's plenty of buying opportunity here. There has been. Now, the last part of the energy group is going back to what we started out at the beginning of today's video is, are they near the optimal entry? So that's where you drop down a little bit more on the daily charts. Now, we want to talk about one group of stocks that surged and then cooled off a little bit, and that's the metals and miners. We briefly touched on them a little bit before, where the metals and miners actually had a really strong run and then pulled back a little bit. So I want to give you the number one stock that I'm actually looking at for this week, and it's this guy, STLD, and you can see it keeps getting up to this $90 level, but the stock has now, after rallying up, it's actually now paused for a couple of days. So what I'm actually looking for the stock to do is actually go down one more day, believe it or not, before it makes a new move, because I want to reset the profit potential based on where I'm looking to buy the stock. So I'm hoping to be able to buy this somewhere a little bit lower, between 92 and 93, down in that area. Oh, we got a lot going on in the market this week. The big thing is the Fed. Now, I want you to take a screenshot of this because I'm going to give you, every day we looked at everything that we do is called stacking the order flow, right? So coming into the day, coming into Monday, take a screenshot of this. This is the list of stocks that meet stacked order flow criteria. So you can take this list, go through stock by stock, and see which ones you believe are near the optimal entry and which ones you believe are matching your resources. Dollar-wise, do you have enough money to trade that stock and that account? So I'm going to pull this up right now. You want to take a screenshot of this, okay? So if we hop on over to the research, you can see the amount of research I do for everybody during the day. This is the list of stocks. So I'm actually going to do it 2 different ways. I'm going to pull it out so you can see the entire list. And you can see that it's actually 47 stocks. You know what? I'm actually going to make it a little bit easier for you to see. I'm going to scroll through this. There you go. That's probably a little bit easier to see. So you can see if you want to take a snapshot of this, it goes all the way down to number 17. You can probably watch this video again. So then we'll go from 20 to 36, and then we're going to break it down by sector over here, so you can actually break this down even a little bit further. And you can see it's a total of 50 stocks. So you might need to watch that one just one more time. But then we want to break this down a little bit further, and we want to break down the sectors. And remember what we just talked about before. We want to see if there's any sectors that are outstanding right now. And you can see actually financial, Visa and MasterCard are two that we haven't talked about today. And mostly because they're beyond the optimal entry. You can see the kind of moves that they've had recently. So again, here's the question that I have for you. Have you found opportunities to buy stocks in the last couple of weeks, or have you been reading the negative headlines where everybody's talking about doomsday? If you learn order flow, and more importantly, if you understand how to read the tape. So in other words, tape reading, if we can spot order flow, is the big money doing something? And then learn to read the tape, which is it still valid? You put those things together, you start to get some of these ideas, and all of a sudden, you're not reading all the negative headlines. You're actually participating in some ideas because you took that extra 15 minutes to do that game planning. So I just gave you a big list of stocks that have stacked order flow. Hopefully you took a screenshot of that, and hopefully you took a screenshot of the sector rotation for the week. Let me actually give you the sector rotation one just one more time, and we'll hop on over there. And this is for the week. So you could actually see, now we could go into some pockets of opportunity in real estate. If we kind of go back over here, and instead of looking at solar, we're actually going to go into the real estate sector. And you can see 25 stocks meet that criteria. Now let's actually sort that down by performance, and let's sort them by the week. So actually you can see that some of these, look at the real estate sector. Some of them are actually breaking out, right? That's actually pretty exciting, quite honestly. So I'm going to challenge you again. So we just gave you this big list. Now we just threw on another list of stocks in the real estate sector that are showing relative strength as well. So I want to challenge you a little bit. And I'm going to ask you a question. Have you spent the month of October reading all of those negative headlines and having it scare you? Or are you learning to read the order flow and learning tape reading and finding these kind of gold nuggets every day where you're constantly putting your money into good ideas and you're the one at the barbecue that's smiling and your friends are wondering why you're so happy while stocks are, you're reading all these bad headlines? If you learn how to do this, it's pretty exciting because it puts you in control of the outcome. I think that's really the most important thing. You want to wake up every day saying, no matter what happens in the market, I'm in charge because I know what I'm looking for. And I hope I'm inspiring you to understand that it's possible. You just probably need to learn a little bit more if you're not doing it yet. Look, if you want to join me, our boot camp starts today. I would absolutely love to have you in there. Just $49 to get started. Try it for 5 days. Let me know if I know what I'm doing. Hopefully you do. And we'll be friends after that, right? So have an awesome day, everybody. I will speak to you soon. Click the link below if you want to learn more about the boot camp. Remember, there's some really good sector rotation this week, but the Fed's coming out on Wednesday, so we really have to adjust our expectations for profit targets with all that big news coming out this week. All right, have an awesome day. I'll speak to you soon.